will be hurt and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by major buyers disappearing. And so we're talking global probable depression. And you have to survive that. You have to survive that when that happens. And yeah, it's a heck of a thing. But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. And gold is that trade that is the big winner. And as it stands and moves, so on that silver chart, this is the setup that has triggered for us. So we were talking about the cup and handle. Traditional technical analysts do cup and handles. We actually have an upside HVF in this, which sees you get in earlier with a type of stock, which sees a greater reward. And you'll even see a squeeze within a squeeze here. So the actual entry is down here. We highlighted on, this is a quarterly chart, again, reminder. We highlighted when you first chipped the wire on the main pattern, but actually we were already in long leveraged and you'll stop there. And the gain is up to $330. That's a huge, huge move. This is, as I say, a very big time frame view. It's a massive risk reward, 23.91, my apologies. 23.91. But if you had actually got in here, it's actually even better too. So we were saying, look, this is the point for longs. This is some time ago. We were on your show talking about this. And we've done this divided by the CPI AU CSL as well, which is the alleged inflation rates. Let's just get that risk reward. So this is an amazing chart. That's where you can see 1st of Jan 2025 was the first time you broke the green line, the triggering event for us. And since then you're up, and you're up at 44.15. I point out that there's a kind of 47, 69, 48 blue line here, which runs through those highs. But it shouldn't be, if it has a pause, it shouldn't be excessive. And it's not guaranteed that it will. It's run our first interim target. The next target is up at $90. People will be looking very forward to that because they'll be on the doorstep of 3 digits. And then we're going a whole next level of up. Again, just bear in mind, having just run that first interim level target, the remaining few days of the month, we could come a little bit back. As I mentioned with gold's the king, and silver still needs to be permissioned to run by gold to a degree. It will independently run to a degree, but not too much. If gold comes off a fair amount and starts to be a little bit staid and a little bit more lackadaisical for a while on price behavior, then silver will slow. And the $50 gateway is a very important point. We talk a couple of times, we use our catchphrases with you once, twice, and then on the cup and handle part 3 times, and then we say the 4th time is the lady, the one that breaks. So we could still see the possibility that when you get into this range where you were rejected here, those wicks, you can see those are rejections, that you might get a similar degree coming in the early weeks of October, maybe a bit of a rejection. I don't think it goes far, and I think then you go again, and then that's the big break. That's the one that will take you into triple digits, and we are pretty high confidence on this. It's a good setup. It's a long-term setup. It's one we've been watching for absolute ages. You could have been long from 30. You would already be now $14 to the good. That's almost 50% on your leverage trades. If it's 45 in a few weeks, you would have had a SOP. And if you had started down here, you would have been in even sooner. You would have been in the 28s, 29s, and your stop would be even tighter. So you are in a breakout, fast-moving HVF trade in silver, and our expectation is 330 will be the next major target resting place for this time frame under review, which, bear in mind, is a very macro time frame. So things unfold slowly if you're watching it day for day. But when you look back over the months, you go, wow. A bit like when I was showing you the gold chart on that quarterly time frame. It's just mainly up, really. Even with the periods, the 3 years since 21 where we went sideways, it's mainly up. Let me hand back to you at that point. The main trade is the financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher step ladder when it comes to that. So everybody will be hurt, and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by major buyers disappearing. And so we're talking global probable depression. And you have to survive that. You have to survive that when that happens. And it's a heck of a thing. But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the NASDAQ and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to, that story, properly put Dracula to death on that one, is if we take and do the very charts for you. Let's take the Dow Jones Industrial, for example. It's a popular one. Everyone will say, yeah, but all-time highs, all this narrative. Everything should be measured in gold ounces in a fiat repressional collapse period. There is no sound money when they're all in the fiat system. And that's what you have. The high for the equity market culture is here. That was peak equity. 1999 was peak equity. We're talking a localized high previous to the current stock market's highs that you're making now. That was gold at 256 ounces and the NASDAQ.com boom. You corrected substantially there, and we started to have gold at 1,000. Then gold slowed down a little bit, it went right up to 1927 at this point. Then it came back down a little bit, and they reflated a bit of a NASDAQ bubble. As you can see, I have an inverted setup structure for downside here, which is saying in gold ounces, the Dow Jones is heading down. And it's the same for the S&P and the NASDAQ, despite NVIDIA, despite all the things you say. So stay with the core winner, because everything is a monkey on a grease pole sliding down. And it might go up, but in real terms, it's monkey go down. People that are orchestrating this system behind it, the dark forces, names you don't even probably know or that you might only suspect, are never going to give you your own money. And gold is a keep you honest system. They don't want that. They entrench their power by virtue of controlling money supply, and it's not one they intend to give up. So the typical game is they install. I was listening to somebody, and he was making the case for Bitcoin and why my criticism of his Japanese imaginary friend superhero that came to save him with the Bitcoin creation is a false construct. He said, well, it's the first time and this is happening for the first time. And I go, no, the Chinese invented the printing press. We had gold, and then we got printed fiat, and that was new technology back then. It was paper printed with a very unique stamp, and US said, this is in lieu of that. And then they tried to bypass the value of base money, gold, onto the fiat. And that was new technology, and it was crazy, and it was amazing. It was basically blacksmith's IOU notes, the big guys that shoed the horses, who were holding more gold than anybody ever up at one time and could dish out more IOUs than there were gold. And that is always, a fractional reserve system is always the intention to maintain. And Bitcoin and CBDCs are going to become the new, but but it's technological, it's more convenient, all of this. That's the new derivative proxy that gets inserted in between the real money, which is the base physical metal. So you're going to be always sold an incredible technology and incredible this and incredible that. It's different this time. It's so different. It's always so different, to get you to put faith into a proxy that is based off of a base money that they later sever the tie for, and everything becomes entirely faith, which is fiat. Hence, fiat comes from a faith-based system. We say that note is worth a certain amount of hamburgers or meals or potatoes because of everyone accepting the price for that good, and that note being passed around will secure you it.